Donald Trump walked out of Beijing believing he had just delivered one of the biggest Boeing victories in years. Standing inside the Great Hall of the People after meetings with Xi Jinping, Trump announced that China had agreed to buy 200 Boeing aircraft. He repeated the number multiple times. 200 planes, American manufacturing, American jobs, a major breakthrough between Washington and Beijing. And for a few hours, the headlines looked exactly the way the White House wanted. But then something happened that completely changed the story. Instead of celebrating, financial markets suddenly turned nervous. Boeing stock dropped sharply. Analysts immediately began questioning the announcement. Investors who had spent months following aerospace negotiations between China and the United States were suddenly pointing out the same problem at the exact same time. The deal sounded enormous, but the details looked strangely weak. No finalized structure, no confirmed airlines, no disclosed aircraft mix, no delivery schedule, no financing structure. And almost immediately, another realization started spreading quietly through the aerospace industry. Because while Washington was celebrating headlines in Beijing, Canada had already moved first. And that move may end up shaping the future of North American aerospace manufacturing far more than Trump's announcement itself. Most people still do not understand what is actually happening here. This is not just a Boeing story. This is not just a Canada story. And it is definitely not just another Trump-China headline cycle. What is unfolding right now is a much larger restructuring of industrial power across the global economy. Because while Washington spent years fighting public trade wars with Beijing, something else happened underneath the surface. Supply chains adapted, allies diversified, manufacturing networks shifted, and competitors quietly filled the vacuum. Now, the consequences of those quieter changes are starting to become visible all at once. And nowhere is that more obvious than inside the aerospace industry. Because aerospace is not just about airplanes. Aerospace represents advanced manufacturing. It represents export power. It represents industrial leverage. It represents engineering ecosystems. It represents long-term technological dominance. And increasingly, it represents geopolitical influence itself. That is why the Boeing China announcement mattered so much politically. For nearly a decade, Boeing has struggled inside the Chinese market. And the scale of that decline is much bigger than most Americans realize. Before the 737 MAX crisis, and before trade tensions between Washington and Beijing escalated, China was one of Boeing's most important growth markets in the world. Chinese airlines were rapidly expanding. Domestic travel demand across China was exploding. The country's middle class was growing at enormous speed. And aviation analysts projected that China would eventually become the single largest commercial aviation market on Earth. That market mattered enormously to Boeing, because aircraft manufacturing is not like ordinary manufacturing. These are not products companies sell once and walk away from. Aircraft contracts create decades of maintenance agreements, parts networks, pilot training systems, servicing contracts, and long-term industrial relationships. Winning the aircraft order often means locking in influence for the next 20 to 30 years. That is why losing China became such a major strategic problem for Boeing. After the two deadly 737 MAX crashes, Boeing's relationship with Chinese regulators deteriorated badly. Then, the broader trade war between Washington and Beijing deepened the freeze even further. At the same time, geopolitical tensions between the United States and China continued escalating across technology, semiconductors, tariffs, military competition, and industrial policy. And while all of that was happening, Airbus moved aggressively into the opening, quietly, systematically, and very effectively. Over the past several years, Airbus secured enormous aircraft agreements across Asia, while Boeing struggled with political uncertainty and regulatory complications. At one point, China placed a massive order for roughly 300 Airbus aircraft. Then additional agreements followed. Then more deliveries followed after that. Gradually, Airbus stopped looking like Boeing's competitor inside China. It started looking like the dominant player. That shift matters because once airlines standardize fleets around certain aircraft ecosystems, switching becomes much harder later. Pilots require different certifications, maintenance systems change, supply chains change. Training infrastructure changes. Long-term operational costs change. In other words, market share inside aerospace becomes sticky, very sticky. And that is exactly why Trump's Beijing trip carried so much pressure this week. The White House clearly wanted a major Boeing breakthrough. For days before the visit, officials inside the administration hinted that a significant aircraft agreement was coming. Treasury Secretary Scott Bessent signaled movement publicly. Major American corporate executives traveled alongside Trump's delegation. The message was obvious. Washington wanted to show that American business was re-entering China from a position of strength, and Boeing was supposed to become the centerpiece of that entire narrative. That is also why expectations became extremely dangerous. Because by the time Trump arrived in Beijing, investors were no longer asking whether a Boeing agreement would happen. They were asking how big it would be. Some estimates circulating inside financial media suggested negotiations could eventually involve far more than 200 aircraft. Some reports floated numbers approaching 500 narrow-body aircraft, alongside potential wide-body deals. That expectation became critical because markets do not react to headlines alone. Markets react to the gap between expectations and reality. And when Trump announced 200 aircraft without fully explaining the structure behind the agreement, investors immediately noticed what was missing. That is why Boeing stock fell instead of rising. Wall Street understood something important immediately. Political announcements and finalized aerospace contracts are not the same thing. That distinction matters enormously in aviation. Aircraft deals involve years of scheduling, financing, regulatory approvals, delivery sequencing, supplier coordination, and airline-level operational planning. Without those details, investors often treat major political announcements cautiously, especially after what happened during previous U.S.-China trade negotiations, because there is history here that financial markets have not forgotten. Back in 2020, China committed to purchasing enormous amounts of American goods as part of earlier trade agreements with the United States. Many of those commitments later failed to fully materialize after geopolitical tensions escalated further and the global pandemic disrupted international markets. So when Trump announced the Boeing commitment this week, markets immediately started asking the same question again. Is this a finalized commercial breakthrough? Or is it another political framework that still faces major uncertainty later? And while those questions spread across financial television and aerospace media, Mark Carney was already operating on an entirely different timeline. Because 8 days earlier, something happened in Quebec that most American coverage barely paid attention to. But that event may ultimately matter far more. Inside the Airbus Canada facility in Mirabel, just outside Montreal, Carney stood alongside Quebec officials and Airbus executives to finalize one of the largest aerospace manufacturing agreements tied directly to Canadian production in years. The agreement involved 150 Airbus A220 aircraft, with options for another 150 on top of that. Unlike the Beijing announcement, this was not a broad political statement delivered during a television interview. This was a fully specified industrial agreement, inside an active production facility, with manufacturing infrastructure already attached, with operational timelines already attached, with supply chains already attached, with long-term industrial planning already attached, and perhaps most importantly, with Canadian jobs already attached. That difference changes everything, because the Mirabel Agreement was not simply about selling airplanes, it was about securing manufacturing certainty. Thousands of Canadian aerospace jobs suddenly gained long-term stability through the agreement. Supplier networks across Quebec gained visibility into future production demand. Engineering firms tied to the A220 program gained stronger operational forecasting. Assembly line expansion became easier to justify. Investment planning became easier to secure, and long-term industrial confidence strengthened immediately. That is the part most headlines completely missed. Trump's Boeing announcement generated political excitement. Carney's Airbus agreement generated structural manufacturing leverage. Those are not the same thing. And the deeper you look into the story, the more important that distinction becomes, because the A220 itself represents something much bigger inside Canada's economic identity. Originally, the aircraft was not even an Airbus project. It began as Bombardier's C-Series program, one of the most ambitious industrial projects Canada had attempted in decades. At the time, many Canadians viewed the aircraft as a symbol of national technological ambition, but the program nearly collapsed financially. Development costs exploded, competition intensified, pressure mounted, and eventually Bombardier was forced to transfer control of the aircraft program to Airbus in 2018. At the time, many people inside Canada saw the deal as a humiliation. A national industrial asset appeared to be slipping away. Quebec had already invested heavily into keeping the project alive. Questions emerged about whether the Mirabel production line would survive long-term. And for years afterward, uncertainty hung over the entire program. But now something remarkable has happened. The aircraft Canada almost lost may become one of the country's most important manufacturing anchors for the next decade. And that transformation is not happening by accident. It is happening because the global economy kept reorganizing itself quietly while public political conflicts dominated headlines. And Canada appears to have recognized that shift earlier than many people expected. What makes this story so important is not simply that Canada secured a large aircraft order, it is the timing. Because while Washington spent years escalating public economic confrontation with China, Ottawa began moving in a very different direction underneath the surface. Quieter, less ideological, far more focused on long-term industrial positioning. And that strategy is now starting to produce visible results. Earlier this year, Mark Carney became the first Canadian Prime Minister in nearly a decade to visit Beijing for major high-level talks with Xi Jinping. That visit did not dominate American headlines at the time, but inside diplomatic and trade circles, people noticed it immediately, because the timing mattered. The global economy was already fragmenting into competing industrial blocs. Supply chains were becoming more political. Tariffs were reshaping manufacturing routes. And middle powers like Canada were increasingly trying to reduce dependence on any single economic partner. That includes the United States. Now, that does not mean Canada is abandoning Washington. Far from it. The United States remains Canada's largest trading partner by an enormous margin. The two economies remain deeply interconnected through energy, manufacturing, defense, agriculture, and financial systems. But something important has changed in recent years. Canada has increasingly started pursuing what many strategists describe as economic flexibility, and aerospace sits directly at the center of that strategy. Because aerospace gives countries something extremely valuable in the modern economy: high-skilled manufacturing ecosystems. Once those ecosystems mature, they become incredibly difficult to replace. Aircraft manufacturing requires precision engineering, advanced materials, electronics integration, software systems, logistics coordination, and massive supplier networks operating simultaneously. Entire regional economies begin forming around these industries. Universities align programs around them, governments invest around them, infrastructure expands around them, workforces specialize around them. That is why countries fight so aggressively to protect aerospace production. And that is why the A220 program matters far beyond Quebec itself. The Mirabel facility is becoming more than just another airplane assembly line. It is becoming a strategic industrial node inside the new global economy. And this is where the contrast with Boeing becomes increasingly uncomfortable for Washington. Because while Boeing was struggling through regulatory crises and geopolitical tensions, Airbus quietly expanded production ecosystems across multiple regions simultaneously. Europe strengthened its industrial position. Asian customers deepened Airbus relationships, and now Canada is increasingly becoming part of that expanding ecosystem. The result is a gradual redistribution of aerospace influence, away from the older assumption that the United States would permanently dominate the sector. That assumption is beginning to weaken. Not collapse, but weaken, and global markets are noticing. That is part of why Boeing's Beijing announcement triggered such complicated reactions. The deal itself may still become significant. 200 aircraft is not small. American aerospace workers absolutely benefit from new Boeing orders. And politically, Trump clearly wanted to demonstrate that his administration could restore large-scale commercial engagement with China. But investors were looking beyond the headline. They were asking something much bigger. Can Boeing actually recover the structural ground it lost over the last decade? That question matters because the aerospace industry moves slowly, very slowly. Fleet decisions made today shape airline operations for decades. Supply chains do not instantly reverse. Training systems do not instantly reverse. Maintenance ecosystems do not instantly reverse. And market trust definitely does not instantly reverse, especially in China. Because from Beijing's perspective, the past several years fundamentally changed how Chinese planners think about economic vulnerability. The trade war taught China something extremely important. Dependence creates leverage, and leverage creates risk. That lesson now shapes Chinese industrial policy across multiple sectors simultaneously. Semiconductors, energy, technology, automotive manufacturing, rare earth supply chains, and increasingly, aerospace. China does not simply want access to aircraft anymore. It wants strategic flexibility. That is one reason Airbus gained so much momentum during Boeing's difficulties. European suppliers often appeared politically safer and more stable during periods of escalating US-China confrontation. At the same time, China accelerated development of its own domestic aerospace ambitions through COMAC. The goal is obvious: reduce long-term dependence on foreign aerospace giants altogether. That process will take years, possibly decades, but it is already reshaping the competitive environment. And that creates a deeper problem for Boeing than many headlines currently acknowledge. Because Boeing is no longer competing only against Airbus, it is competing against geopolitical diversification itself. Countries everywhere are increasingly trying to avoid overdependence on single suppliers, single markets, or single geopolitical relationships. That trend accelerated dramatically after the pandemic, semiconductor shortages, shipping disruptions, sanctions conflicts, tariff wars, Ukraine-related energy shocks, US-China tensions. Now, governments across the world are redesigning economic strategy around resilience, not just efficiency. That distinction matters enormously. For decades, globalization prioritized efficiency above almost everything else. Cheapest manufacturing, fastest shipping, lowest labor costs, maximum integration. But the geopolitical shocks of the past several years changed that mindset. Now, governments increasingly prioritize redundancy, diversification, domestic capacity, allied manufacturing, strategic autonomy. And Canada appears to be positioning itself directly inside that new environment. That is why the Mirabel Agreement matters strategically. The order does not simply create aircraft demand. It strengthens an industrial ecosystem inside a politically stable G7 country deeply connected to both North American and global markets. That makes Canada increasingly valuable inside the evolving aerospace map, especially as global buyers become more cautious about geopolitical instability. And there is another layer here that makes the situation even more complicated for Washington. Because Canada's economic diversification strategy is happening while the United States itself becomes more politically volatile internationally. Allies across Europe and Asia increasingly worry about policy swings between administrations. Trade policy shifts rapidly, tariff structures change rapidly, alliance messaging changes rapidly, industrial policy changes rapidly. That uncertainty pushes many countries toward hedging strategies, not anti-American strategies, hedging strategies. There is a difference. Countries are not necessarily trying to replace the United States. They are trying to avoid becoming too dependent on any one country. That is exactly the environment where middle powers like Canada can quietly gain influence. Because Canada offers something increasingly attractive in the modern geopolitical economy: stability, predictability, industrial reliability, and access to Western supply chains without some of the political volatility associated with larger powers. That is an underrated advantage, especially in manufacturing sectors requiring 20 to 30-year planning horizons. Aircraft production absolutely falls into that category. And this is where the psychological contrast between Trump and Carney becomes extremely important inside the narrative. Trump's political style is highly visible, highly personal, and heavily centered around headline moments. That approach generates enormous media attention, but it also creates volatility. Carney's approach appears almost opposite, lower profile, more institutional, more finance-oriented, more system-focused, less dependent on public spectacle. And in industries like aerospace, the quieter strategy may actually be more effective long-term, because aerospace rewards predictability, not drama. Airlines planning fleet investments worth tens of billions of dollars want stability. Governments planning industrial expansion want stability. Suppliers investing in manufacturing infrastructure want stability. Workforces building specialized careers want stability. That is why the Mirabel Agreement hit differently inside industrial circles compared to Trump's Boeing announcement. One created excitement. The other created confidence. And confidence is incredibly valuable in manufacturing, especially after years of global instability. Now, zoom out even further, because this story is not only about aerospace anymore. It is also about how countries adapt when the old globalization model starts breaking apart. For decades, the United States operated as the unquestioned center of the Western economic system. Most allies structured trade around American demand. Most supply chains flowed through American-led systems. Most industrial assumptions depended on continued U.S. dominance. But the modern global economy is becoming more fragmented. Power is distributing across multiple centers simultaneously. China became too large to isolate completely. Europe built independent industrial strength. India is rising rapidly. Southeast Asia is expanding manufacturing capacity. Middle powers are becoming more strategic. And increasingly, countries are trying to maximize flexibility instead of choosing absolute alignment. Canada's aerospace strategy fits directly into that larger transition. Quietly, methodically, and perhaps more successfully than many Americans currently realize. Because while headlines focused on Trump standing beside Boeing executives in Beijing, Canada was already locking in years of manufacturing activity back in Quebec, and that may ultimately reveal the deeper truth behind this entire story. In the modern global economy, the countries shaping the future are not always the loudest ones. Sometimes they are the ones building quietly while everyone else watches the headlines. And that may be the most important lesson hidden underneath this entire Boeing story. Because what happened this week was not simply a disagreement between two aerospace companies. It was a snapshot of a much larger transformation happening across the global economy in real time. A transformation most people still do not fully see yet. For years, political leaders talked about trade wars as if they were temporary negotiating battles. Tariffs would pressure competitors, deals would eventually get signed, markets would normalize, and global business would return to the way it worked before. But that is not what actually happened. Instead, the world adapted, quietly, permanently. Companies redesigned supply chains. Governments diversified industrial relationships. Manufacturers spread production across multiple regions. Countries began preparing for a future where economic fragmentation could become normal rather than temporary. And once those systems begin changing, reversing them becomes extremely difficult. That is exactly the challenge Boeing faces now. Because Boeing is not just trying to sell airplanes anymore. It is trying to rebuild trust inside a geopolitical environment that fundamentally changed during the last decade. That takes much longer than a single summit, much longer than a single headline, and much longer than a single televised announcement from Beijing, especially because the competitive landscape itself now looks completely different. Airbus expanded aggressively, while Boeing struggled through crisis after crisis. China accelerated its own domestic aerospace ambitions. Governments across Asia increasingly prioritized supplier diversification, and now countries like Canada are positioning themselves inside the new industrial architecture forming underneath the global economy. That is why the Mirabel Agreement matters far beyond Quebec. It reflects a larger strategic trend: middle powers quietly building leverage while larger powers dominate public attention. And history shows that moments like this often matter more than they initially appear, because industrial shifts usually look slow right before they suddenly look obvious. Think about what happened in semiconductor manufacturing. For years, most people barely paid attention to Taiwan's strategic importance. Then suddenly the entire world realized how dependent modern economies had become on a small number of critical supply chains. The same logic increasingly applies to aerospace. Aircraft production is not just another export industry. It represents advanced industrial capacity. And advanced industrial capacity increasingly determines geopolitical power. That is why governments care so deeply about who builds the planes, where they are assembled, where the supply chains operate, and which countries control the surrounding ecosystems. The aerospace industry supports defense manufacturing, engineering talent pipelines, advanced materials industries, precision electronics, software systems, logistics infrastructure, research and development, export financing networks. In other words, aerospace sits at the intersection of economic power and national security. That is why this Boeing-Airbus competition matters far beyond aviation enthusiasts or financial markets. It reveals where industrial momentum is shifting globally. And right now, that momentum appears increasingly distributed rather than concentrated. The United States still remains the largest economy in the world. It still dominates in many sectors. It still possesses enormous technological and military advantages. But the era where America could automatically assume industrial supremacy across every major sector is becoming harder to sustain, especially in industries where geopolitical instability creates incentives for diversification. That is the environment Canada appears to understand increasingly well, because Canada's recent economic strategy under Mark Carney looks designed around one central idea: build resilience through diversification before global fragmentation accelerates further. That includes expanding Asian trade relationships, strengthening advanced manufacturing, increasing industrial self-positioning, maintaining Western alliances while broadening economic flexibility, reducing overdependence on any single market. And whether people agree with that strategy politically or not, the aerospace sector shows it may already be producing results. The Mirabel facility now has years of production visibility. The A220 program crossed major order milestones. Canadian aerospace suppliers gained stronger forecasting confidence, and global airlines increasingly view the aircraft as one of the most efficient options in its category. That is not just symbolic success, that is structural positioning. Meanwhile, Boeing still faces enormous pressure simultaneously from multiple directions. China remains uncertain, Airbus remains aggressive, global regulators remain cautious after past crises. And the company still faces broader questions about long-term manufacturing execution and strategic competitiveness. That does not mean Boeing is collapsing. Far from it. Boeing remains one of the most important industrial companies in the United States. Its defense business remains enormous. Its commercial aviation presence remains massive globally. And if the China agreement eventually solidifies fully, it could still become extremely important financially. But investors understand something political audiences often do not. Recovering lost structural ground takes years, sometimes decades, especially once competitors establish themselves deeply inside key markets. That is why financial markets reacted so differently from political headlines this week. The White House saw a symbolic breakthrough. Markets saw unresolved uncertainty. And underneath both of those reactions, Canada quietly kept building manufacturing certainty back in Quebec. That contrast may end up defining the entire story, because increasingly, the countries benefiting most from modern geopolitical fragmentation are not always the biggest powers. Sometimes they are the countries flexible enough to adapt early, while larger powers remain trapped fighting older battles. And that may describe Canada's current position surprisingly well. For decades, Canada operated economically in the shadow of the United States. Most strategic assumptions centered around maintaining access to American markets. But recent years appear to have accelerated a quiet shift in Ottawa's thinking. Not away from America, but away from overdependence. That distinction matters enormously. Canada is not trying to replace its relationship with Washington. That would be impossible economically. Instead, Canada appears increasingly focused on maximizing room to maneuver inside a fragmented global system, and aerospace is becoming one of the tools helping achieve that. Because the countries controlling advanced manufacturing ecosystems during the next era of global competition will possess enormous strategic advantages, not just economically, politically, diplomatically, and geopolitically. That is why the Boeing story matters so much more than the headlines suggest. On the surface, it looked like a major American comeback in China, but underneath the surface, it revealed something much larger. It revealed how much the global economy already changed, while political leaders were still arguing publicly about trade wars. Supply chains adapted, industrial systems diversified, competitors expanded, middle powers repositioned themselves. And now those quieter transformations are beginning to surface in very visible ways. One side returned from Beijing with a headline. The other side already had factories preparing production schedules. One side celebrated a political announcement. The other strengthened a long-term industrial ecosystem. And in the modern global economy, that difference may matter far more than most people realize today. Because the next phase of global competition may not be decided by the loudest negotiations. It may be decided by who quietly builds the strongest systems underneath them. Thank you for watching USA News Now. I'm Daniel Mercer.